Hey guys, what's going on? My name is Justin and welcome back to my channel. So in today's video, I will be updating you on a stock that I cover pretty consistently here on my channel, and that is Workhorse stock. Now, I am not one of those channels that only talks about EV stocks such as Workhorse just to try and get more views and make more money. I really try to make videos that help you find the best stocks to buy regardless of whether they are EV stocks or not. But that being said, I really do like making these EV stock videos, and let's be honest, a lot of you who are subscribed to my channel are very interested in these EV stocks. So I do my best to make update videos on these EV stocks only when I feel like there is significant news that has been released. And when it comes to this announcement from Workhorse stock, I think this is pretty big news for Workhorse that is a positive sign that the stock might be ready to take off soon. That being said, if you are new to the channel and you want to keep up with the latest news on Workhorse stock, go ahead and click that subscribe button. It's really easy to do, and I promise you that you will not regret it. So with that, let's go ahead and jump into the news that Workhorse released yesterday. It was announced yesterday that Workhorse would be entering into a strategic partnership with Hitachi and Hitachi Capital. Through this partnership, Hitachi will basically hold Workhorse's hand through the development and deployment of their electric delivery vans. And there are two ways that Hitachi will help out Workhorse. First, they will assess Workhorse's manufacturing and their operational and supply chain capabilities to see if there are ways that Workhorse can streamline the process and cut costs. And secondly, Hitachi will help Workhorse develop a national dealer network and will provide financing to both the dealers and the customers. So those two things will be huge for Workhorse and will definitely help them approach the manufacturing and distribution of their vans in a way that follows industry best practices. And basically what is happening here is that Workhorse is hiring a consultant. Instead of Workhorse trying to come up with the best way to do things themselves, they have decided to spend the money to hire another company to come in and tell them exactly what they need to do. The benefit of this is that Workhorse minimizes the risks of something going wrong. Even though Workhorse does have many executives on their board with automotive experience, those executives' experience is still limited based on their specific roles at their previous companies. So having an independent company like Hitachi come in that can assess everything and give specific recommendations for improvements is very important. And honestly, I think it could be a good move for Workhorse stock anyways, because like I said, it minimizes the risks and increases their chances for success, which investors typically like. So in order to fully understand how good of a deal this is for Workhorse, we have to look at the value that Hitachi is capable of providing and also what Workhorse will be giving up in exchange. These two things are important because if Hitachi is not a good company, then it would not be able to provide much value to Workhorse. But thankfully that is not the case. Hitachi is actually a very well-known Japanese company that operates 10 different business segments and has a market cap of $66 billion. The business segments that will especially be useful to Workhorse include their automotive systems and financial services business units. Their automotive systems business unit specializes in car information systems, drive controls, electric powertrain systems, and engine management systems. So as you can see, Hitachi has a lot of experience in the automotive space and should be able to help Workhorse out tremendously early on. In reading the announcement, it seems like Hitachi not only has the experience to help Workhorse scale their business, but also innovative and proprietary technology that Workhorse can use. And when it comes to Hitachi's proprietary tech, Workhorse CEO Dwayne Hughes specifically mentions their EV technology, smart factory automation, and digital technologies. So not super specific, but if we read down further in the press release, we do get some additional information on the technology that Hitachi will provide. A chief executive at Hitachi added that Hitachi's tech will allow Workhorse to grow production capacity, develop a reliable charging network, and develop a digital platform for intelligent vehicle routing and energy optimization. So again, no one is being super specific on what specifically the technology is from Hitachi, but overall I like what I am hearing so far in terms of what the technology can provide and do for Workhorse. Now, to be fair, Hitachi did mention one product by name, and that product is Lumada. Lumada is short for Lumada Data Services, which is, according to Hitachi's website, a cost-effective, intelligent, multi-cloud data foundation for enterprise users and systems. And I did some more reading on Hitachi's website, and it looks like Lumada is a core technology that Hitachi will use to help Workhorse. With Lumada, it looks like Workhorse will be able to use data to streamline their business operations and reduce their costs. And while Lumada was the only specific technology mentioned in the press release, I did some more digging on their site and found more information on Hitachi's electric powertrain systems technology. It says on their website that Hitachi Automotive Systems has been pioneering the development of electric systems and components needed for electric vehicles. And they go on to say that they currently offer solutions for hybrid electric vehicles that can reduce the size and weight of the vehicle and also improve efficiency. So based on this information and the reputation of a company like Hitachi, I do think there is a lot they can offer to Workhorse. Which brings me to my next point. What exactly will Workhorse need to give up in exchange for Hitachi's help? Well, at this point, we don't know because it doesn't say in the press release, but my guess would be some sort of royalty fee for each vehicle sold. And this makes sense in my opinion because Hitachi is a Japanese company that operates in the US. So building out strategic partnerships with companies like Workhorse that are in the growing EV space is a smart move. What's interesting to me though is long-term, will companies like Hitachi even be necessary? Traditional automotive manufacturers rely on separate companies for nearly every component that goes into their vehicles. This leads to very complicated supply chains, among other issues, but Tesla, for example, is flipping that business model upside down and instead is making everything themselves. Also, part of it is that electric vehicles are just way simpler to make than traditional ICE vehicles. So that helps reduce the number of components needed anyways. So in my opinion, this could be a long-term strategy for Hitachi to stay relevant as an automotive component supplier. Because over time, as more and more vehicles become electric, automotive suppliers like Hitachi could see their revenues drop considerably. So basically what I am trying to say here is that Workhorse might not need to give up that much in exchange for Hitachi's help, which would be a really good thing for Workhorse stock. So let's go ahead and pull up the chart for Workhorse stock because I want to give you my opinion on why the chart is behaving the way it has for the last 2 months. You can see that during this time, Workhorse stock has traded essentially flat. But if you notice over the last 2 weeks, things might be getting ready to change, and the chart is starting to trend up a little bit. Now, I do not get too much into technical analysis on this channel, but sometimes there are things that we can learn from analyzing the charts. Here, what I'm seeing is that people are waiting. There's not a ton of people selling and there are not a ton of people buying. And this makes sense, of course, since the stock is trading flat, but if Workhorse can break through the resistance level of $18 to $20 a share, then we might see another huge run sometime soon. But I don't necessarily think this news with Hitachi will be able to make it break out above the $18 to $20 limit. Now, I should say it's probably going to trade in that $18 to $20 limit, but really we need to see it break above $20 a share before it has a potential to run up to, say, $25 or $27 a share. And the reason I'm saying this is because of the uncertainty with the USPS contract. This is the big news that everyone is waiting for. And the bad news is that we still don't have a confirmed date for when the contract will be announced. Currently, there is a lot of speculation and hearsay that it will happen sometime this year, but there is no official news that it will. In fact, if we look at the USPS Inspector General's report that was released on August 12th, we can see that the date for the production RFP award is still to be determined. So officially, we still don't know when and who will be awarded the USPS contract. So I think we will see a spike when the date is announced and then another spike if and when Workhorse is awarded the contract. But for the time being, I think buying Workhorse stock around $15 a share is a good entry point, and then holding until the contract date is announced is a good strategy. So hopefully you guys found this video helpful. And if you did, then make sure to hit the like button so more people can see this video. Also, make sure to check out my other investing videos because I put a lot of work into each video and I do it all for you guys. So if you have comments or suggestions for stocks you would like me to check out, feel free to comment below. And with that, thank you so much for watching, and I'll see you guys in the next one.